Hi, this is Kaveh Sartipi with Mason-McDuffie Mortgage here in Danville, California. Wanted to discuss with you today a question that has recently come up of whether it makes sense to buy now or to wait and buy later. The question came up by a client of mine who has seen home prices go up quite a bit this year and was wondering if buying later would make more sense. What I informed him was, what we got to do is really take a look at interest rates and what interest rates have done over the last 12 to 18 months and what we expect them to do over the next year or so. Interest rates can really affect what your buying power is. Earlier this year we had seen home loans around 3.5% on a 30-year fixed rate. We're now up about a full percentage point. We're roughly around 4.5% on a 30-year fix. And next year we're expecting rates to be up around 5.25% to 5.5%. As interest rates go up, your buying power does go down. So let's take an example of a $500,000 purchase, 20% down, with a 3.5% interest rate, which was roughly what it was at the beginning of this year. At 3.5%, if we take a look at your mortgage principal and interest payment, your taxes, and your homeowner's insurance, your rough estimate of monthly payment is $2,392. Taking that same scenario but going to a 4.5% interest rate of today would actually mean that your buying power will go down. Your new purchase price is now $455,000. So we've lost $45,000 in buying power with an interest rate of 1 full percent higher. At the 4.5% interest rate, again 20% down, you'll have a loan amount of $364,000 and your monthly payment is $2,393. So it's basically $1 more than the interest rate was at the beginning of the year and a purchase price of $45,000 less. Now let's take a look at what would happen next year if if interest rates do go up to 5.5%. Your buying power, to keep within the same $2,390 a month payment, your purchase price would have to go down to $415,000. With taxes and insurance, your total monthly payment is $2,392. So across the 3.5%, 4.5%, and 5.5% interest rate, keeping your monthly payments at $2,392, you've gone from a purchase price of $500,000 down to a purchase price of $415,000. This is what we're seeing as interest rates will go up. The Fed has indicated that obviously they're going to stop their tapering, their purchasing of their mortgage-backed securities. This will increase mortgage rates over the next year and down the road. Interest rates, although they have come up, they are still at very, very attractive low rates. So it would make more sense to look at purchasing now rather than to wait and purchase later. If you have any questions or want to run a scenario that's specific to you, please give me a call at 925-708-7178. Thanks so much for your time. Hope to talk to you soon.